But I think the biggest news of this week is their Bybit hack. Now, this is the largest crypto hack that's ever happened, and everyone was, concerned what was going to happen here. It happened on Friday or over the weekend, and the hackers stole $1.4 billion of Ethereum, which is which is huge. And fortunately, CEO of Bybit came out very quickly and gave confidence to the market and said they're able to cover this from their balance sheet. I think that put everyone at ease. So what happened here and who's behind this one, Craig?
Yeah, so a bit of context around Bybit. Bybit's actually the second largest crypto exchange by volume, absolutely huge Asian market and North American as well. They're sort of been around for a lot longer than people realize. And Ben, who is the founder of Bybit, he was on live stream. He was taking questions. He was I think he shared his Whoop sleep score. He got no sleep, but he had no stress either. It's just like, this guy's like low-key Chad vibe. But essentially, there's a lot of token chain analysis investigators. And the one that we've spoken about in the past, Zach XBT, he traced the stolen funds and linked them to a North Korea hacker group called the Lazarus Group.
And we've spoken about these guys before. They did a hack on the Ronin Bridge worth $600 million last year, and they've been responsible for a bunch of other hacks as well, including one for Tether and Horizon Bridge for $100 million. So these guys are making bank.
Yeah, and I believe it was actually human error that made this hack possible. Apparently it was a sort of phishing system and then someone approved an unauthorized transaction. Do you know a bit about?
Yeah, I know a little bit about this. So they had the crypto stored on cold storage, which is best practice, and they received a request for a large withdrawal, and you need 3 people to sign or to confirm this transaction. However, what came up on the sign or the confirmer's screens wasn't what was actually being processed. What was being processed was much larger. So it looks like these hackers had got into the software that they'd use to manage the transfers of crypto in and out, but maybe not necessarily the cold storage device that was holding the assets. And as a result of that, the key team members that did approve this transaction didn't know what they were actually approving until it was too late.
It's an interesting one, right? Because obviously Bybit had this shortfall and they've reported that they've taken loans and grants from their competitors, Binance and OKX and some other competitors in the market, which just shows that crypto, even though it's a competitive industry, these guys are working together. What is also interesting is I've seen is the hackers actually funneling some of the funds through Pump Fund.
And Solana, yeah.
And Solana. So they made a Solana shitcoin called, I don't even know what it's called, and it generated around $26 million in trading volume. So they're trying to sort of get it out that way. But what I've actually seen now is a lot of platforms are blacklisting this address and what other addresses are associated with this address. So this could become a situation where these funds may never leave the blockchain.
Yeah, that's right. They might never end up on a centralized exchange, but anything could happen here. There's all sorts of mechanisms and tools to use to wash the coins, to elude the trackers off the trail.
I had this thought as well. Bybit's obviously, I think it's Chinese.
I think it's registered in Singapore or Hong Kong.
Hong Kong, yeah. So they're an Asian exchange. And I had a thought, if this was Coinbase or if this was Kraken, if this was an American or North American exchange, this could potentially be a big political issue. North Korea, 1.4 billion, the biggest hack in history. I think we're sort of not seeing Trump or anyone talk about it because it doesn't really concern him. But how can North Korea be still pulling off these, allegedly, North Korea pulling off these sort of highs?
It's still the Wild West. At the end of the day, if you're holding crypto yourself and you're storing them yourself, you're the custodian of your own keys, and you're subject to, phishing attacks, being hacked. And that's just how it rolls. And unfortunately, there's lots of user error. But there are better tools and systems and processes coming out for people to use in order to keep their crypto safe. But this industry is new. And while these things are still happening, I think that it just creates the opportunity for other entrepreneurs to come out and build better products where this can't happen as easily.
Maybe we'll touch on best practices as well for if you have money in crypto. I've always thought that even having it all in a ledger, or I know that's best practice on paper, but I think maybe some better practices would be just maybe splitting it out. Have some here, have some there. Don't have all your eggs in one basket. What would you say is some best practices for people after this news?
I think that's a good way of doing it. And I think there is a debate on whether or not what's safer, storing your own keys on a ledger and they're opening up the potential of user error, or storing on an exchange where you're opening yourself up to counterparty risk or the exchange being hacked. With the latter example, there's the opportunity that their balance sheet could cover a hack, or insurance could cover the hack. They could pay users back from revenues over time. Alternatively, I think that more crypto has been lost through user error of people storing their own coins than there has been on cryptocurrency exchanges. So I think you have to look at your own skill set and figure out, are you willing to learn how the technology works? Really get in the weeds on how some of the wallets function so that you can protect the assets that you store. And if that's, if you're not technically inclined, then maybe outsourcing that could be a better option for you.
Yeah, for sure. I think people on Twitter, etc., are calling it similar to an FTX or Lunar event, but it is a huge hack. But just remind everyone that the FTX one was $12 billion essentially missing from a balance sheet. So a lot of very different circumstances, this one, and it remains to be seen if they can recover the funds. It's not unknown to happen previously. That has been possible. And they've given out a $140 million reward for anyone that can help in
recovering those funds,
getting these funds back. So this story, I think it's not the end. I think there's probably some more to come out of it. But off the back of that, since the hack was in ETH, Bybit actually forced themselves to buy back the ETH.
Yeah, people were expecting this over the weekend that Ethereum's going to pump. They got to buy back $1.4 billion of Ethereum.
It's still dumped.
And they bought back $700 million of Ethereum over the weekend, which generally trading volumes are lighter on the weekend, and Ethereum still dumped. All of crypto still dumped, which just goes to show that how strong the macro environment can affect crypto.
Yeah, for sure. All right, guys. Well, just another exchange hack in the news, but let's move on now. A bit of a fun one,